On the 22nd of July, 2026, 5 days before this episode was written, a listed South African retail group called Pepkor filed an announcement on the Johannesburg Stock Exchange that most of the continent's fintech industry immediately understood as the biggest African fintech deal room event of the year. Pepkor would inject 1.57 billion rand of cash into a Cape Town company called Shop2Shop. In exchange, Pepkor would also fold its own fintech arm, called Flash, into the same company at a valuation of 10.6 billion rand. The combined entity would be worth 21.3 billion rand. It would process more than 200 billion rand of transactions every year across the formal and the informal South African economy. And a listing on the Johannesburg Stock Exchange was already signaled. The number that mattered was not the 21 billion, it was the 200 billion. That is how much money moves every year through the shopkeepers, the spaza owners, the midi wholesalers, and the corner counters that South African retail banks and card networks quietly stopped serving 2 decades ago. It is roughly 1/3 the size of the country's formal supermarket sector, and it had been sitting outside the visible financial system for most of the 21st century. Shop2Shop is the company that decided that money was too big to leave alone. But Shop2Shop is the second act of a founder who had already built and sold one informal market fintech to the same buyer 14 years earlier. His name is Peter Berry. His first company, called Flash Mobile Cash, was acquired by Pepkor on the 11th of April, 2012. He stayed inside Pepkor to run it, then quietly walked back out, then built the next one, then had Pepkor buy that one too. This is the story of the man who sold Pepkor, an informal market, twice. This is the story of Shop2Shop. The company built for the shopkeepers the banks would not serve. The company that quietly wired 177,000 South African traders together on card acquiring, cash counting safes, and merchant-to-supplier payments. And the company that on a single Wednesday in July of 2026 turned an invisible economy into a listed unicorn in waiting. Hi again. Welcome back to the pod. My name is Farouk. And today we are going deep into the story of Shop2Shop. This is the story of a Cape Town founder who watched South African banks abandon the country's spaza economy for 2 decades, decided to build the payments and cash rails they refused to build, sold his first version of it to a giant retailer in 2012, built a second version, and on the 22nd of July, 2026, sold that one to the same retailer for a 21.3 billion rand combined valuation. Let's get into it. The origin of Shop2Shop does not begin with a startup. It begins with a market that the formal economy had already given up on. By the middle of the 2000s, South Africa had roughly 100,000 spaza shops. They were small township counters, often the size of a garage, selling airtime, bread, sugar, cold drinks, and paraffin. Between them, they moved somewhere between 150 and 200 billion rand of goods a year. They sat inside a larger township economy that the researcher Gigi Alcock has estimated at more than 1 trillion rand, and essentially none of that money touched the formal banking system. The reason was arithmetic. A South African retail bank card terminal cost between 1,200 and 2,000 rand. Interchange rates were priced for shopping mall retail, not for a shop taking 240 rand per average sale. Cash-in-transit costs to bank informal takings were punishing, and the robbery risk of walking the day's cash to a wholesaler was, for many operators, the single largest operational danger of the whole business. So the money stayed in cash. Cash walked to the wholesaler. Cash walked to the taxi rank. Cash walked home. An entire economy moving in physical notes, sitting outside every metric the country's finance industry knew how to measure. The first person to build a business around that gap at scale was a South African founder named Peter Berry. His original company was called Flash Mobile Cash. It was not, at first, a payments company. It was a value-added services company. It sold small handheld terminals to spaza shopkeepers so they could dispense airtime, data, prepaid electricity, and lotto tickets from behind the counter. It was small margin, it was high volume, and by the early 2010s, Berry had deployed roughly 90,000 of those devices across the country. That, in a single number, was the largest informal market device fleet in South Africa. On the 11th of April, 2012, the South African Competition Tribunal approved unconditionally the acquisition by Pepkor Capital of 3 companies in a single bundled transaction: Flash Mobile Cash, Shared Phone International, Take It Easy Vending. Pepkor's stated rationale, filed with the tribunal, was to expand its business operations to serve the informal market. The seller's stated rationale was simpler. They wished to realize their investment. Peter Berry did not leave. He stayed on to run Flash inside Pepkor. And for a while, that looked like the end of the story. It was not the end of the story. Somewhere in the years after the Pepkor acquisition, Berry left the Flash operation he had built and returned to his second act. There was, already, a Cape Town legal shell registered in his name and one other, called Shop2Shop. The company had been incorporated on the 27th of September, 2005. It had sat largely dormant for over a decade. And around 2017, according to industry consensus, Berry reactivated it as the vehicle for a very different informal market bet. Flash had solved value-added services. It had put small devices onto the counters of 90,000 shops. What Flash had not solved was the three problems that shopkeepers themselves said were the most painful things about their working day: accepting card payments from customers, getting cash out of the till and into a bank, and paying suppliers without physically carrying money to a wholesaler. Shop2Shop was built to solve all three. First, a tap-to-pay terminal, priced meaningfully below the standard South African bank device, not sold as a profit center, sold as a foothold. The head of sales at Shop2Shop, a man named Richard Charlie, has said publicly that the goal of the device pricing is, quote, not to make money from the device. The goal is to empower businesses, end quote. Second, cash counting smart safes for larger stores and wholesalers. A shopkeeper drops the day's takings into the safe. The safe counts them. The safe credits a Shop2Shop digital wallet. Cash in transit collects the physical notes on a schedule, and the shopkeeper never carries cash out of the shop again. Third, that same wallet then pays upstream suppliers digitally. The bakery, the beverage distributor, the wholesaler. No cash walks, no robbery risk. And every transaction that used to be invisible now leaves a data trail the platform can underwrite loans against. There is a detail in this story that does not appear in any pitch deck. The Shop2Shop logo is a camel. Berry chose it because a camel is a burden bearer, an animal that carries weight over long distances without complaint. But by the time Shop2Shop was rolling out across South African townships, a large share of the country's spaza owners were not native South Africans. They were Somali migrants, Ethiopians, and other African trader communities who had steadily built up ownership of what came to be called the spazarete. And in the Somali trader community, the camel is not a burden animal. It is a wealth motif. It signals prosperity. The logo, chosen for one meaning, was read as another, and it materially helped the platform earn trust in a customer segment that no South African retail bank had ever taken the time to understand. Over the same years, an institutional investor moved onto the Shop2Shop cap table, Lebashe Investment Group, a 100% black-owned South African investment holding company chaired by a former Public Investment Corporation executive named Tshepo Maloele and with a former Deputy Minister of Finance, Jabu Moleketi, as its deputy chairman. Lebashe was the only publicly named institutional backer of Shop2Shop before the July 2026 announcement. The company did not run priced venture rounds. It did not publish a valuation. It did not disclose revenue. It grew quietly for the better part of a decade, entirely inside private cap table arrangements between Berry, Lebashe, and management. That is unusual for a company this size. It also meant that when the numbers were finally forced into daylight, they arrived all at once. The numbers arrived because Pepkor was legally required to disclose them. When a listed South African company acquires or merges with a target of this size, the target's financials go into the deal circular. And so, on the 22nd of July, 2026, for the first time in Shop2Shop's history, the country got to see the print. For the 12 months to the 30th of June, 2025, Shop2Shop had generated revenue of 9.3 billion rand. It had generated earnings before interest, tax, depreciation, and amortization of 661 million rand. It had generated a profit after tax of 385 million rand, and its 3-year growth rates were unusual for any company at that scale anywhere in the world. Revenue compounding at roughly 28% a year, earnings compounding at roughly 85%. The operating scale for the 12 months to the 31st of March, 2026 was equally arresting. 177,000 traders on the platform, 114,000 tap-to-pay devices deployed, 2,900 cash-counting safes installed at larger stores, 172 billion rand of transactions digitized inside the year, and of that, 131 billion rand was supplier payments, digital rails moving money from shopkeepers directly to their bakeries, beverage distributors, and wholesalers. The deal itself is unusually elegant on paper. Pepco injects 1.57 billion rand of cash into Shop2Shop in exchange for new shares. Shop2Shop uses the cash to settle its debt and fund growth. In the same transaction, Pepco contributes the entirety of its Flash subsidiary, valued at 10.6 billion rand, into the same company. The combined entity, provisionally called Fintech Co., is worth 21.3 billion rand, roughly 1.3 billion United States dollars. Pepco holds 57.1%. Peter Berry, through associated entities, holds an indirect 24%. The remainder, approximately 19%, sits with Labash and Shop2Shop management. Combined transaction throughput exceeds 200 billion rand a year, and Pepco has signaled its intention to separately list the combined business on the Johannesburg Stock Exchange in the medium term. There is one governance detail worth naming. The chief executive of Pepco is a man named Peter Erasmus. Erasmus is reported to hold an indirect 13.2% economic interest in the deal structure, worth roughly 2.8 billion rand through personal association. As a direct result, he recused himself from Pepco board deliberations on the transaction. This is not, in the ordinary sense of the word, a controversy, but it is the kind of detail that will follow the deal through its regulatory approvals, and any reader of the deal circular will find it. To understand why Pepco was willing to write a 1.5 billion rand check for an informal market payments company most South Africans had never heard of, look at what was happening in the rest of the merchant acquiring sector. In August of 2025, less than a year before the Shop2Shop announcement, Nedbank had acquired a formal small merchant card reader company called iKhokha for roughly 1.65 billion rand. That deal placed the formal small business acquiring segment inside a Big Four South African bank. It also made clear that every bank in the country now understood that the merchant counter, at every size, was strategic. If Nedbank took the formal side, and Standard Bank was building an instant money cash-out network across 400,000 points, and Time Bank was onboarding customers through supermarket kiosks, then Pepco's largest strategic vulnerability was the informal side. Shop2Shop closed that vulnerability. Flash added scale. And in a single transaction, Pepco moved from being a retailer with a fintech arm to being a fintech at retail scale. Berry's own framing in the Tech Central interview on the day of the announcement was that South Africa is now closer to a cashless, informal economy than most people realize. Card acquiring is solved. Cash out is solved. Supplier payments are solved. The last true holdout, he said, is the minibus taxi industry, which moves roughly 2/3 of urban South African commuters and still runs on cash. Solve taxis, Berry said, and cash dies in townships. That is a 5-year thesis. The News 24 headline distilled it into 6 words. Only taxis stand between South Africa's informal market and a cashless future. Which brings us to today, 5 days after the announcement. The deal is signed but not closed. Regulatory approvals from the South African Competition Commission and Competition Tribunal are pending, alongside other customary conditions. Close is targeted for the first quarter of 2027. The Johannesburg Stock Exchange listing is medium term, which in South African market language means somewhere between 12 and 36 months after close. And several important questions have not yet been publicly answered. Who runs the combined Fintech Co? What is Peter Berry's operating role after the deal closes? How the two overlapping merchant bases, 177,000 at Shop2Shop and 176,000 at Flash, will be deduplicated and integrated, and whether the Standard Bank instant money distribution partnership survives in its current form once Pepco controls the merged network. The larger picture is easier to state. 2 decades of quiet informal market building has, in a single transaction, converted an invisible South African economy into a listed asset class. The 200 billion rand of transactions that flow through South African spaza counters every year now sit inside a company with a real valuation, a real cap table, a regulator watching, and a listed parent responsible for disclosing its numbers. That has never been true before. And it happened because a Cape Town founder built the same informal market fintech twice, and had the same buyer buy it twice. The open questions are the ones that will define the next 5 years. Whether Fintech Co can actually list on the Johannesburg Stock Exchange at the valuation it is now marked at. Whether the informal market can be formalized on the timeline Berry believes it can. Whether the taxi rank finally digitizes. and whether the specific pattern of a South African founder building 2 consecutive informal market fintechs for the same acquirer becomes a template that other founders in Nairobi, in Lagos, in Cairo, in Kigali will now try to copy. The bet is placed, the regulator will decide the close, the listing is on the horizon, and an economy that spent 2 decades outside the formal financial system is, at last, on the inside. In the mid-2000s, a Cape Town founder registered a dormant company called Shop2Shop and set it aside. He spent the following 7 years building a different informal market company called Flash Mobile Cash and sold it to a listed South African retailer called Pepkor. Then, quietly, he walked back out and reactivated the dormant one. 14 years later, the same retailer bought the second one too, at a 21.3 billion rand combined valuation, and set it on a path to a Johannesburg Stock Exchange listing. The invisible economy is no longer invisible. This is Asili Africa. Every empire has an origin. That is the story. And like every story worth telling, this one is still being written. If this episode made you see something differently, share it with someone who needs to hear it. I am Farouk. This is Asili Africa. Every empire has an origin. Now you know this one. So start building, because yours might be tomorrow's origin story. See you on the next one.